Geopolitical concerns are weighing heavily on economic matters in many parts of the world amid Russia's violent military campaign in Ukraine. For more, I have Professor Kim Se-won from Ewha Women's University. Professor Kim, welcome back.
Thank you for having me.
I also have Professor Oh Jun-suk from Sookmyung Women's University. It's good to see you again, Professor Oh.
My pleasure.
Meanwhile, joining the session virtually is Mr. Troy Stangarone, Senior Director at the Korean Economic Institute of America. It's a pleasure to have you on, Mr. Stangarone.
It's good to be here. Thank you.
Professor Kim, we'll start here in the studio. Korea's exports have expanded for 16 consecutive months back in February as well and pushed the trade balance in goods back into positive territory. Let's begin with a few words on these favorable findings.
Yes, the export has been the main driving force to recover Korean economy since the outbreak of pandemic 2 years ago. Despite the spike in imports due to higher oil prices, Korean economy was still able to post a trade surplus in February of $840 million, which is a turnover of the previous 2 months' trade deficits. Korea's export stood at $53.9 billion, or a 21% increase in February from a year earlier, as overseas shipments of the memory chips, automobiles, and chemical products increased over global economic recovery. It is actually one of the largest imports size in the history of the Korea from 1950s. We also have a highest figure for imports in February, which amounts to $53.1 billion, which is 25% increase on yearly basis. So Korean economy is, relatively speaking, and Korean export is also recovering from previous 2 months' trade deficits. However, there are quite a few uncertainties ahead of Korean export for this year because there are lots of negative factors like geopolitical issues in Ukraine and still disrupted global production chain and particularly slowing Chinese economy. So I think Korean trade surplus will be switching between negative and positive quite a few times until the end of this year.
Right. And keeping in mind what Professor Kim has just said, Professor, despite the stellar performance, of course, on the export front, prospects look quite obscure given the uncertainties in light of the situation over in Ukraine. What are your thoughts?
As Professor Kim commented about the geopolitical alignment, I might say the war has triggered the geopolitical realignment, which means the ups and downs of the economy is expected. What is worried on the economic side now is two things. One is inflation due to supply chain disruption. And second one is that the financial instability caused by the market disruption because of the interconnectedness of the global economy with the financial market. More than anything else, I must mention the war in Ukraine comes at a bad time for the economy because already I might say the inflation has been on the way due to COVID-19 pandemic. And then overmore, there is a spark of the oil price already up to $110 per barrel. And then supply chain disruption of energy, which might aggravate the inflation. Someone say that the agflation means the overall price of agricultural product to the slow inflation, cost increase of the raw material and then energy, and then even to the stagflation. And another thing we have to think about this is the market disruption. Already FedEx and UPS has halted its shipment to and from Russia, and then Maersk as a giant ocean cargo carrier stopped accepting order bound for the Russian goods. And then investors famously detest this kind of business uncertainty. As a result, the Korean stock market and then Dow Jones plummeted down 700 points right after the invasion. As such that we might say the financial instability might cause a lot of negative effect on the global economy. And it is expected the financial market instability will dent confidence among customers and then business altogether for the time being.
Right. And Mr. Stangarone over in the US, what more can you tell us about the broader repercussions of Russia's military campaign in Ukraine, especially on the global oil market?
So when we think about this from both the U.S. and a global perspective, Russia is one of the world's largest energy producers. Prior to the invasion, it accounted for about 12% of crude oil exports, about 10% of refined petroleum, but also more significantly, 25% of LNG exports in the world. And as has been mentioned, we've seen oil prices go up since the invasion. They're touching about $130 a barrel. Prior to the invasion, you had a situation to where there was already a very small difference between the supply that was available and the demand. So you had tight energy markets. The U.S. knew that the war was coming. We've seen the U.S. intelligence agencies talk about this consistently in the lead up to the war. The United States has been working with partners specifically in the Middle East to try and take and alleviate some of these challenges. You know specifically 85% of Russian LNG exports go to Europe. The United States knew there was a chance that Russia could try to cut off those exports to Europe or use that as a threat. So they've worked to try and improve LNG specifically to Germany via tankers. And so there's been a lot of work done by the United States to try and find other avenues. We've also seen recently, the United States has been talking with Iran for a while to try and resolve the nuclear deal. There's been reports over the last week or two that they might be close to resuming that. If you get a deal with Iran, that would take and help alleviate some of the potential losses from Russia on global markets. But more interestingly, the United States is also apparently reaching out to Venezuela to see if they can try and pull Venezuela away from Russia, perhaps relieve some sanctions there, and also try and take and put more oil onto the markets to deal with these challenges. So it's a concern, but the U.S. government and our partners are trying to work to find a way to try and alleviate some of these strains on the energy market.
Right, they are. Meanwhile, Professor Kim, there was quite a bit of local media coverage about Korea securing an exemption from the US's foreign direct product rule, which comes as part of tougher trade restrictions on Russia. Do tell us more about this particular rule and the implications of an exemption for Korean companies.
First of all, the size of the Korean export to Russia is not negligible. It is about $10 billion as of last year. And the major export items from Korea to Russia are automobile, auto parts, and steel, complicated high-tech steel products. After invasion of Russia into Ukraine last month, all U.S. allies and EU member countries joined a package of economic sanctions to Russia right away. But it is true that Korea government gave an impression that Korean government is kind of hesitating in joining this sanction in the early stage of the invasion. Anyway, Korea was not included in the first foreign direct product rule exemption list of the U.S. government. But last Friday, over a negotiation with U.S. government, Korean government finally won exemption from a foreign direct product role of the U.S. government, which is a good news to Korean exporters to Russia. So actually, quite a few Korean companies are using U.S. technologies and software for their export items to Russia. So Korean companies are feared to affect from this foreign direct product rule. And finally, it is a good news to have an exemption, won the exemption from U.S. government.
Right. So the software that we're using are used in our making of mobile phones, cars, and washing machines, is that
Right,
it?
exactly.
Right. Mr. Stangarone, what does this exemption imply with regard to the Seoul-Washington alliance, do you think?
Well, I think, as Dr. Kim just said, Trade Minister Yo was in D.C. He was working with the United States. There's been a lot of efforts over the last few months on other issues as well, to where the United States and South Korea have been working closely. So I think this really signals three things, even if it took longer for Korea to get to this point. One is that there's a deep working relationship between the United States and South Korea. It's something we knew, but we've seen that more recently in this situation. It also signifies that the United States and South Korea trust each other. When we look at how this is going to work, part of this is ensuring that goods are not sent to Russian entities that perhaps have ties to the military. So this signals that the United States trusts South Korea to make sure that what is exported to Russia goes to the right individuals, which is the population in Russia, not the government and the military. And lastly, and I think perhaps most importantly, it signals that the United States and what its allies are trying to do, which is deny the Russian government, which is responsible for what's going on, access to the tools it needs to wage war, and not the Russian population who needs access to consumer goods. And so I think those are the three main takeaways from this decision.
Right. And also under the punitive measures, Professor O, we have the SWIFT
Right.
that has confirmed it will disconnect Russian banks subject to EU sanctions from the international payment system starting on March 12th, which would be this coming Saturday. What exactly does this financial restriction entail?
Since its initial creation in 1973, SWIFT has held strong as a kind of cushion for enabling the universal banking message system, making international transaction and settlement for any bank across the globe. SWIFT stands for Society for a Worldwide Interbank Financial Telecommunication. Today, SWIFT connects more than 11,000 financial institutes in more than different 200 countries. What is the effect for Korean companies doing export and investment? Definitely negative outlook. As Professor Kim commented about, the trading volume with Russia is not negligible. But there is one thing we have to think about the strategic alliance, with economically strategic alliance with Russia is also important in the near future. Simply speaking, cutting a bank from the SWIFT system is similar to cutting a person off from the internet. Exactly the same situation. Simply speaking, without SWIFT, nor internet shopping, nor internet banking is allowed in the international transaction, whether in the form of international trade or international investment. In prior to buyer's payment, seller have to procure a product and then make a shipment in advance. Isn't it risky? So as a cushion for this kind of risk insulation, SWIFT system is required, so-called that the bank have to give honor. This honor is a banking terminology, which means settlement or the guaranteed payment by bank. With this honor of the bank, that it is feasible to make international trade. But here, one thing I must add comment is about it is the move to ban Russia from the SWIFT might likely hasten a new era of a monetary system. That is because as an alternative, Russia will likely to adopt a kind of blockchain system. So I might say that cryptocurrency might be used as an international settlement. At least between Russia and China, they might have fully developed, and then they might most probably interconnected as an alternative of their international settlement.
Right, in the absence of SWIFT then.
Right.
Mr. Stangarone, aside from supporting sanctions proposed by the US and its European allies against Russia, do you suppose Korea needs to take additional measures to perhaps share its condemnation of the bloodshed in Ukraine?
I do. When we look at this war, this is a different war than we've seen since the end of the Second World War. This is the first time one of the great powers has invaded its neighbor unprovoked. It's a situation to where, despite Russian rhetoric, this has nothing to do with NATO. This is ultimately about Russia's desire to have a sphere of influence and to dominate its near or broad neighbors. And this is the specific reason that the Eastern European countries joined NATO, to ensure that they would not again be dominated by the Russian state. And so what this ultimately boils down to is, what are the rules of the international system, and are we going to maintain a rules-based system in the international system? And for Korea, this has been a system that has been very beneficial to it. I think it's in Korea's national interest to ensure that it's maintained and to defend that order. And so from that very perspective alone, I think it's important for South Korea not just to take and join the United States and others in following those sanctions, but to also look and see what can it do to take and demonstrate to Russia that this is not acceptable in the 21st century, that we need to take and go back to the negotiating table and resolve things peacefully.
Right, and that may be a major task for the incoming administration, of course. Meanwhile, Professor Kim, back here on the local front, tariffs have been lowered to ease the burden on exporters, and fuel tax cuts have been extended to rein in inflation, which is a global concern, as you mentioned earlier. How do you respond to these efforts by the Moon administration, and what else do you propose to keep the local economy on track?
There's no question that one of the largest shocks from the war of Ukraine and Russia is the higher inflation generated from higher oil prices. So Korean government implements quite active measures to protect domestic households and companies, like slashing both of tariffs and taxes on oil products. I think they do have effects in the short run, but the problem is they can't do this forever because it is using government's money. We can't use government's money for these policy purposes forever. So given the current situation of inflation, the major factors are all out of the country, like international production chain disruptions and oil price increases. So there should be something more flexible tools or buffers that protects domestic households and companies against higher inflation, which is not easy for governments. So government should be more trying to think about the more tools to protect domestic citizens against the much higher than expected inflation.
Right. And Professor O, following Wednesday's presidential election, a new administration will come into office from May. What perhaps do you believe would be a major task for the incoming administration on the economic front?
As soon as when the new government take office in May, perfect system, always new government, there is a kind of inflation pressure, and then deferred interest rate hike will be proceeded as soon as possible. So tackle with the inflation pressure might be the top priority right after they take offices. And second is supply chain resilience is very important. Supply chain composed of various streams, but the upstream, I mean the part and raw material composed of small and medium companies, very fragile and very volatile to the economic shock. So new government have to provide kind of supporting fund to sustain their business after the take offices. And lastly, it's resource and then energy diplomacy is needed as a kind of do trade policy of the new government. Especially, we have to make an economic partnership with the Middle East countries in a way to diversify source of energies.
Right, and talking about partners, Mr. Stangarone, Korea's top two trading partners are China and the US. That being said, what do you recommend for the incoming administration to seek to do, perhaps, to balance its ties with the US and China?
I think it's more in the long run about getting the balance right in the South Korean economy than it is about balancing between the United States and China. South Korea has traditionally been an export-oriented economy and specifically manufacturing-based. That has led to an underdevelopment of the services sector. You know, we talked earlier about how, for example, South Korean phones run on U.S. software. There are some, like Naver and Kakao companies that have promising potential software developments, but ultimately getting the balance between the service sector and manufacturing sector correct and reducing dependence on exports is going to be key. The less dependent South Korea is on exports, the less likely it is to see its economy disrupted by wars or other disruptions. And so heading forward, you know, it's also key for South Korea to do this because we're living at a time of economic change. Setting aside the war with Russia, setting aside the US-China trade war, we're seeing manufacturing and software integrated more, be it autonomous vehicles or other types of manufactured products. And so if South Korean industry wants to stay competitive either in the export markets or domestically, it really needs to take and improve the services sector, specifically in the area of software. So I think this is the real key in terms of balancing the economy going forward, not necessarily between the United States and China.
Right, and very briefly speaking, Professor Kim, what would you believe is the economic, or should be the economic priority for the incoming administration, keeping in mind what Mr. Stangarone has just said?
Well, it looks that everyone has different expectations and hopes on next government. I think the economy after COVID pandemic provides both of challenges and opportunities to Korean economy because industrial structure is changed and the way of people behave is changed. But let me just introduce the top 7 most urgent problems that should be taken care of by next government, which came from the survey of Korean Economic Association very recently. They are low productivity, low birth rate, unstable housing market, low potential economic growth, household debt, income polarization, and lastly, government debts.
That is a long list, Professor
Right.
Kim. Right, there's a long list and a lot to do that. All right, Professor Kim, as always, thank you very much for your thoughts. Professor
Thank you.
Oh, thank you for being with us today.
Thank
and
you.
Mr. Stangarone over in the US, thank you for your time and your thoughts as well.
Thank you.